So the president vowing that this is a detox from a decades-long spending spree that surged under the Biden administration. Charlie, one of those writing in the New York Post this morning, Wall Street pukes up its own medicine. Hey, Charlie, great to see you. So, again, is this just Wall Street too short-sighted and not thinking long-term enough?
Well, I mean, there's a lot of things going on. Wall Street, you have to understand the nature of the beast, right? Generally speaking, Wall Street, meaning the stock markets, will correct sort of viciously and violently to the downside on what it perceives to be bad news. It'll overcorrect. I mean, I saw this in 2009 when Obama first got in there. I mean, the Dow went down to 6,000 on the notion that the banks were still impaired despite the bailouts. As we know, we had a sort of a seminal stock market rally after that. There was a lot of QE, money printing, but still, that was being spoken about, but the market still corrected violently to the downside. So the markets are correcting violently to the downside on the notion of tariffs, and there are good reasons why, because that's a tax on goods. It could lead to higher inflation, and you can just take it from there. The thing is that the markets aren't taking into account, my view, and I think this is pretty much backed up by everybody I'm speaking to, is that there's there's some goodies coming, right? Lower taxes, less regulation, less fentanyl in this country because we closed the borders, which is going to be good for the economy. Less immigration, which means you don't have illegal immigrants clouding our healthcare system. All this is happening right now, and it's not being factored into the market. So I would just say this, if you're looking at this sort of broadly, this is a puke.
Technical term,
we need to get some of this out of our system. The Trump administration, I know this from my sources close to it, wants a quarter of this, a quarter of puking. So it's going to get a little rough in the next 3 months. We may even hit a recession. I don't know. Well, but by the way, just one other thing. A lot of this stuff was being baked in under Biden. I don't care what anybody says. Just because the guy's in there a month and doing what he said he would do does not lead to a recession. If you look at the markets, under Biden, about 5 stocks, essentially, were moving all the indices up, right? Those stocks needed to correct. There were all the AI stuff, and no offense, AI may be the future, but I don't use it that much. I mean, they needed to correct. NVIDIA needed to correct. So
wait, you didn't get puke from AI for that article?
Excuse me?
The puke didn't come from AI?
I did not type it in and say
that was not from AI. That came out of your own brain.
Yeah, my own perverted brain.
Okay.
And that's one thing. The other thing is there was economic slowdown.
Right.
And one other thing I'll make the point. The trajectory we were on was not sustainable. Think about it this way. Under Trump, pre-COVID, budget deficit of $900 billion plus or minus, no, it was plus, about $980 billion with 2.5% growth. Take out COVID. Think about Biden. Budget deficit of $2 trillion on economic growth of 3%. How do you got to screw up really bad to get that.
Well, Brian, he mentioned tax cuts, and that's something that you've certainly been harping on, that this is a market and an economy and a narrative right now that has been tariff, tariff, tariff. And yet, hello, there's all the goodies. There's deregulation coming. There's tax cuts, and that's the side that, we're hoping to get through this continuing resolution bill so that we can sort of get to the other side of that, hopefully by September.
You need to rebalance the narrative a little bit. The narrative is all on the side of tariffs right now. It's not really on the side of the tax cuts or any of the goodies, as you say. You also have to kind of rebalance how this stuff often plays out. So I was trying to figure out what happens to prices of things like steel when you do tariffs. And we've done this before. We did it in Trump's first administration. We've got a chart here on steel tariffs. Okay, it's a hard one to read. It's kind of like a Taylor chart. It's got a lot going on in it. But I'll point you to
nice chart of the day, though.
What are you saying?
Look at 2018, okay? There's a little gray line going up from 2018. That's when the tariffs went in first under Trump. Look what happened to prices of steel. They went up, and what happened within the year? They came back down essentially to the level that they were at before any of the tariff talk started. It's the same relationship with aluminum. The point is we adapt to these things. The U.S. steel and aluminum industries adapted to this. They didn't really increase their hiring, but they did increase production, and it gave people substitutes. So this is kind of a freak out, I agree, and the market needs to get it out of its system. But the long-term play here, I think, is still in favor of the goodies, the good stuff, the taxes,
the real question is, though,
cuts.
Can we stomach a couple of months of this? I mean, listen, I'm getting emails now. We should point out there are 2 economies. There are 2 economies for the rich dudes that did very well. They can hire their nanny, a migrant off the books, pay nothing, right? Pay them almost nothing. They can bet it. They can trade around inflation because they're rich, speculate in the stock market. And there's the average person. The average person did not benefit from this. You know, I'm hearing from these people, oh, don't average people have 401ks? Well, if a guy makes $65,000 a year, or a woman, that's an average salary, right? How big could their 401k really be? Right. So they didn't benefit from the upside of Bidenomics, which was juice in the economy in terms of spending and in terms of monetary policy through the Fed. So what Trump is turning around and saying, no, we're going to rearrange our economy to help that 50% of the population that got screwed on inflation.
Which Scott Bessent, before he became Treasury Secretary, talked about over and over again, about working men and women in this country, the lower 50% of the nation did not benefit from asset inflation, and they got intentionally screwed over.
They paid for the market. They paid for rich people getting richer. And one other thing I would make, and I think, you know, listen, you kind of could have your cake and eat it too here. The Trump administration is doing a lousy job messaging all this. Why does it take us sitting here talking about the goodies and the tax cuts? Scott Bessent gave a speech before the Economic Club. I was there. It was so wonky. My eyes were like closing. And, you know, he's a really smart guy. We're lucky to have him. But he saved the goodies for the end. And that's when Larry Kudlow asked him about taxes and stuff like that. And, you know, you gotta lead with your best shot. There's one thing, you can explain tariffs all you want. By the way, markets hate tariffs. It's like Dracula holding the cross up to Dracula and he freaks out. That's when you say the word tariff, markets are going to go nuts.
Well, Jackie, talk to us about that, because the White House does come out with a statement and saying that we see a strong divergence between animal spirits, something that you see in the stock market, versus what we're actually seeing unfold from businesses and business leaders. So they're trying to make the message again with the Business Roundtable today that we're talking to the people who actually employ people and they see some optimism and we want to help them hire.
Well, look, I'm not necessarily sure it's a problem with the messaging. I think that there are so many things to your point. Well, there are so many things.
I think it is. I should stifle.
Every time Trump says tariffs, it goes down like 200 points.
Yeah.
But I want to hear this case. Make it.
No, I just don't think it's a problem necessarily with the messaging. I think people don't necessarily understand what's going on. I think they made a mistake by coming out with their tariffs first. They should have done their bill. They should have put their tax cuts in. Okay, fine. Then it is
Agree
messaging.
with me, please.
I'm talking about the order of functionality and how they got things done. And so I think the tariffs spooked the market. We've all been sitting at this table and covered the market for years. Sometimes it just takes one little trigger to get people selling. This is an S&P 500 that's been up over 20% the last few years. The rich have been benefiting. We've had high inflation. People haven't necessarily loved these companies. They've invested in excitement. They've been chasing return because prices were high for everything, and they thought they would find yield in the marketplace. And so this is the trigger for a correction on this market. I just think that, when it comes to long-term policy and how this is going to play out, people will see that the nuts and bolts of what he's trying to do are the right thing for the country when they do play out. And I don't think you can look at the market and say, oh, they're panicking, they're selling, this is bad, it's not going to work. I think the market is disconnected from some of this policy to a certain degree.
Dagen, final thoughts.
I'm going to go ahead and say this, and I wasn't going to say it, but again, I used to co-host with the Treasury, the transportation secretary, and like
Howard,
the transportation
who's that?
secretary.
Duffy.
Oh, I forgot.
Shame on you. But some of the people in communications at the White House, in the Treasury, will not respond to the show, trying to just book anybody to talk about this economy.
So you're saying
they won't even answer the show. But Scott Bessent goes on one of the lowest rated shows on another network. I mean, you could open the window and shout out of the window in the middle of New York City.
He did speak with Kudlow at the Economic Club.
I know. I'm just saying that if they want to communicate with the American people, then...
Well, he's trying to communicate to the market.
So I'm calling him out.
Here's the thing.
Like, you know what? The people who work for these Treasury secretaries need to answer a text message.
By the way, I know
it's shameful.
I know that Howard is the...
I'm not talking about Howard
is the Commerce Secretary. But my point is, he's trying to like soothe the market, and he did a horrible job doing it.
Well, we've much more on these markets coming up. I know. We're going to be following it all day.
I'll air dirty laundry all day because I don't care.